what we're seeing here is that the unemployment rate in Australia in September has dropped from 3.7 to 3.6%. The market had expected a flat rate at 3.7%. This is stronger than expected. So this again will aid the case for the Reserve Bank to consider raising interest rates at its next meeting in just 2.5 weeks' time in November. And the reason for that is because a strong employment market is going to add to inflation. And of course, with rising house prices now in many capital cities, that is only adding to the wealth effect for many Australians. And really, this is an impact. So have a look here. Many people expected that the unemployment rate would drift towards 4% as these interest rates really took hold. You can see now sitting here at 3.6%. The fact of the matter is that really it's much stronger than anybody would have ever anticipated.
Yeah, and if you go back a year or so, I mean, I think it's fair to say it is defying expectations considering the rate rises. The caveat here, Ross, I know you're still digging the numbers. From where I'm looking at it here, the participation rate stayed the same, so jobs were added, but 40,000 full-time jobs net were lost, 46,000 part-time were gained. So in terms of hours out in the economy, you're probably looking at a reduction, I suppose. So that'd be the caveat, would it, on today's figure?
I think so. But then consider another thing, and that is in the past 12 months, 500,000 people have come into the country, yet the unemployment rate has not jumped enormously. So that also says something about the strength of, or the relative strength of Australia's economy, that it's absorbed those new people coming to the country. But then, as you point out, it's that participation rate that has been at historic highs, in particular for women, which is really a good sign for Australia's economy. But then the second thing is it's also out of necessity that many families with the rising cost of living and rising interest rates have basically had to have as much income coming in to cope with these increasing costs. Now, the big issue for Australians right now is there is work out there. And when you've got work, you can cut back. When you don't have work, it's really impossible. There's almost nowhere to hide. But the fact of the matter is that while you've got income still coming through, these job markets strong, but the problem of this is that if you've got a very strong jobs market, that adds pressure to wages. Pressure on wages is also what the Reserve Bank Governor spoke about yesterday, pressure on inflation. Inflation is sticky and therefore gives the Reserve Bank very few clues as to what it can do to really take any effect. Now, I can tell you also that the market was down almost 1% before this number came out. You can see here it might have blipped up a little bit, but the fact of the matter is that's pretty flat as compared with it was. I can show you also, let's have a look at the Aussie dollar. Have a look at the Aussie dollar. So it's dropped off a little bit. It had been sitting at about 63.25. It's come off just a little bit since these numbers have dropped in the last little while. And the one thing that's really important is the short-term interest rates, 1-year bonds, 4.4%, Tom.
So the 10-second take, Ross, what are the chances now? Are they increased of a cup day rate rise?
You betcha they have. They were already pretty strong. They've now increased again.
Ross Greenwood, there you go.